Yes, Joseph here again. Thank you so much for joining me on yet another edition of my weekly video. If this is the first time that you're watching this video, then I want to welcome you and thank you so much for tuning in. And hopefully you're going to like what you see by the end of this video. And if you do, then please feel free to leave a positive comment. You can like the channel or you can even subscribe to my channel. Anything you do, it will be greatly appreciated. So anyway, in today's video, I've got a few trade setups that I want to show you guys. So whether you're a structured trader, a pattern trader, or even both, then I've got something for you. So anyway, let's head over to the charts and I'll show you guys these trade setups that I'm going to be keeping my eye on as we head into this week's trading in the Forex market. So the first currency pair that I'm going to take a look at is the US dollar against the Japanese yen. And we do have a potential, there is a potential for this market to rally. This is just based on what the structure of the market. I mean, if I just take this over to the daily chart first of all to kind of show you guys what the overall trend in the market is, well, we can see that the market is, well, there isn't really a trend, to be honest. I mean, if you can say, if you look back from down here, you can see that the market is bullish. But we had this deep retracement back into this previous structure, and then we're seeing the market rally. We had a huge rally where the market just went on and on and on, and finally we get into some correction here. So now at some point this market is going to resume this rally. And obviously it's anybody's guess, to know where the market is actually going to start, this rally. I mean, if this correction could go on, for a long time. However, if I drop this to the actually 1 hour chart, there is a chance that we might get a rally. Now this is just a chance, like I said, based on a very good technical analysis, which I'm going to go through with you guys now. So looking at this chart right now, we can see that the market came in. We had a double bottom here. Where's my, let me just mark this area. We had a double bottom here. Oops. And then the market kind of rallied. And obviously, if you're looking at this market from down here, we can see this. Now, just focusing on this area. I mean, I could go all the way back to show you guys what the market has been doing in terms of the. So we're reading the type of structure the market has been put in. So if looking at this structure, we can see that the market put in a bearish structure right there. Came up to this previous structure here, came back down, formed a double bottom. The market tried to rally, but then it put in a lower high, and then the market came back down, creating a new structure low. And then the market rallied into the previous structure, back down again, forming a double bottom. And then we can see the market has rallied, breaking the previous structure, the two previous structure high. So this is usually a sign, an indication that the market is about to start rallying from this point. However, we can see what the market has done, and even though it continued to rally, but then we had this market came back down, and then it's back down into that previous structure, the previous double bottom. So now we have to look for an entry, for a reason for this market to kind of rally from this point. I think we're going to get a rally simply based on a few Fibonacci confluence ratio, and also the fact that we've got this double bottom here. So this should act as a support for this market. So anyway, the first Fibonacci, I mean, if I bring in my Fibonacci ratio from this double bottom all the way to this high, we can see that the market has come into the 886 retracement here, and we're starting to get a little pop back up. I mean, actually, let me just bring in my RSI to see if we can see any sort of oversold conditions. Yeah, we can see that the market has been oversold. The market came into an oversold territory. So now there is a chance, this oversold territory coupled with the 886 retracement, and also let me bring in my another Fibonacci again from this high there. We can see a 127 extension of this impulse leg. So the 127 extension and the 886 retracement coming in at the same point. And obviously, for those of you guys that trade cipher patterns or like me, I would be looking. This could be a potential, trade on a C leg of a cipher pattern. Looking for the market to rally back into somewhere. Assuming we get a rally from this point, we'll be looking for the market to complete the cipher pattern all the way, yep, Look at that. So anyway, I'm not interested in the cipher pattern at the moment. I'm just interested in what the market is likely to do from this point. So our Fibonacci confluence, the 886 million 127 extension, and if we bring in another Fibonacci extension, Fibonacci extension, we can see. So I'm going to take an extension of this leg, swing high to swing low, and back down again. So we can see that the 161 extension just comes a little bit below those two Fibonacci confluence, and it's actually around that support area. So we've got a lot of plenty of reason that this market is likely to rally from this point. We got the oversold conditions on our RSI. We've got the two Fibonacci confluence, the 886 and the 127 extension, and we also got the 161 extension a little bit below those 2 points. So this is effectively a structure trade, and obviously for those of you that trade the C-leg of a cipher pattern, it can also be an opportunity for you to get long from this point. And obviously the stop loss just has to go below this this double bottom really, and it's here. I mean, if you look at the risk to reward ratio, it could potentially turn out to be a very good trade. So moving on to the Aussie dollar against CAD, I think I've got a potential cipher pattern. It should be on the daily chart if I'm not mistaken. Yeah, there it is. So we've got a potential cipher. This is just a cipher pattern really. It's not really nothing to do with structure. It's just a pattern, a cipher pattern. So we got the X to A leg, A to B leg. We got the 382 retracement and the 127 extension. So if you just think back to what I just showed you on the US dollar yen, this is where the market is currently with the dollar yen. In terms of a cipher pattern, if you buy on the cipher pattern, expect the market to complete the cipher pattern somewhere there. So let me just bring in my triangle. So we've got a potential cipher pattern, and this market is actually approaching an interesting point. In a second, I'm going to zoom in to show you guys. So we've got a potential cipher pattern that will complete around 102.33. So we're still somewhere about 190 pips away. So if you look at this on the daily, so we can see the market has come into an interesting point, and we do have some resistance at this point. So, and obviously this is the highest high. So we do have a chance that this market can come into this zone, and we can get a move back down once this cipher pattern completes. So anyway, moving on, the next currency pair. This is just basically a structure trade on the Aussie dollar. So we can see the market has come into a little bit of a resistance here, the previous structure resistance. I mean, this is one of the basic things. I think any trader, anybody that calls himself a technical trader, this should be the easiest thing to spot on a chart. The resistance and support. I think that's one of the first things that we learn as traders, as technical traders. One of the first things that you learn, one of the very first strategies that you're going to learn is resistance and support. But obviously back then, when we're trading resistance and support, it's the situation where once the market reaches the resistance or support area, I just buy or I just sell. But obviously over the years you kind of get the experience that sometimes you're gonna have to look for an entry point. Things like oversold or overbought conditions on your RSI. You have to look for maybe sometimes lower close on the candlestick, or even some sort of a candlestick pattern that you might be able to that will give you a signal that the market is about to change direction. Because obviously it's not a guarantee. Just because the market is approaching a resistance area where there's structure, it's not a guarantee that the market is going to straight away just turn back down. I mean, most of the time it does that because the market tends to respect structure in the market on the chart. So like I said, it is a situation that where you might have to just wait and see if the market can give you some. I mean, we did actually have a cipher pattern on this trade. However, I didn't take it because it was the stop loss would have been. Yeah, we do have it. Yeah, so you can see it's kind of a similar situation with the Aussie dollar CAD, and this cipher pattern is actually, it's actually, well, if you take it now, you're gonna get a better entry because we actually completed the cipher pattern somewhere there. So the market is kind of like we're getting like some sort of a correction here. This could be a rising wedge really. So it's just a matter of time before this market, starts going back to the downside. So moving on, I think we do have a similar situation in the euro dollar as well, where the market has come into that support area again. So you can see that the most of these currency pairs that are at a very decision point, really, I would like to call it. So this is another support area where the US dollar is kind of flirting with this support area, and obviously, if the market comes into that, so again, you have to look for a reason to end for entry. Some sort of bullish divergence on your RSI, or if the market comes in, it looks like we do have a double bottom here. So if you trade 2618 trade, you look for 121.61 retracement where you would look to buy. But in my case, obviously, I've been waiting for any sort of bullish advance pattern. That would give me a very good opportunity, because this market is in consolidation and it's approaching the lower end of the channel, which really it's going to give you the best in terms of risk to reward ratio, and the best chance of the market giving you a winning trade. So the next one, and this is going to be the last currency pair that I'm going to look at, is actually the pound against yen, and I do actually have an active trade on this one. I think this is one of the trades that I posted on TradingView as well. It's an active trade and there's a bullish back pattern. Let me bring in my Fibonacci just to confirm. I think it is a bullish back pattern. Yeah, we've got the 161 retracement. We're currently losing on this trade, but we'll see what happens. I mean, the fact that I expect the US dollar to dollar against the yen to rally, that might help this currency pair as well. So just need to keep my eye on them. So I got in at about 140.04. So I'm currently long on this currency pair with my signal service. So, but we haven't reached our stop loss. I think our stop loss is around 139.28. So we'll see what happens. I mean, I've already taken a loss on this trade. I think somewhere here I had a bullish back pattern that ended up being a losing trade. So it looks like this one might also give me another losing trade, which is okay. Obviously, it's gonna suck, but this is part of trading, man. You have to take your loss with a pinch of salt and move on to the next trade. So yeah, that's the trade. I think that's the trade I posted on TradingView. The pound against the Japanese yen. So as you can see, yeah, the market is currently in the red. So we'll have to wait and see what the market is going to do. So I'm moving on to my signal service. This week has actually been really, really busy. I mean, for those of you that follow me on TradingView, you've seen I've posted a lot of trades this week. And if I bring in my spreadsheet, we can see that I've taken 1, 2, 3, 4, 5, 6, 7 trades this week alone. So it has been a very, very busy week. I mean, we started off February really slow. The first couple of weeks only taking 1 trade. It was a losing trade, and it was like going to be like, oh, this month is the winner. Might not be get to take enough trades, but then all of a sudden, the third week and the fourth week, everything just even though the fact that we're still down. I mean, this one we're having to give something back to the market this month. Sorry, after the great start we had in January with 158 pips, so we've had to give 46 pips back to the market. But that's going to depend on what happens with this pound yen trade. As you can see, I left it open. So if it's a winning trade, it might give us a second consecutive month in profit. But if not, then, like I said, it's not the end of the world. We move on to the month of March and see what happens. So as you can see, 19 trades taken. January, 2 months gone. 2 months. The month is still not over, but I don't expect to be taking any trade in a couple of days. But we'll see. We'll see what happens. So as you can see, 10 winners, 9 losers. I mean, this is how I expect the ratio. This is how it's going to be. I mean, towards the end of the day, once we get to the end of the year, you're going to see like it's going to be very, very much 50-50. But obviously, the most important thing, this is probably the average profit and the average loss. Like that, with this average profit, I expect it to be somewhere around 65. Once we take in enough trades, and this is where I expect my average loss to be around 50. And this is going to be the most important thing, because if this goes to 65 and this stays at 50, then regardless, having a 50% winning ratio will always give me what's it called, profit returns or whatever you want to call it. So looking at my equity curve, we can see that the market, we can see we haven't really gone anywhere really. We're just still trying to find our feet, like if you would like to call it that. But once we have like 2 consecutive months in profit, you're going to see that this equity curve start to rise. So yeah, I mean, this is it. I don't think there's anything I've got left to tell you guys. Yeah, so that's it, guys. Thank you so much for watching. Like I said, if you like this video, then you can leave a positive comment, subscribe to my channel. Anything you do, any help you do, it's greatly appreciated. So until next time, have a good week.